Hey everybody, Kimosabi here. I'm going to give you an update on price action, waves, and kind of what I'm seeing in the matching legs that we have going on here. Um, this correction that we have going on right now really looks a lot like that, and we'll get into the more detail about that a little after. But the implications of that could be really awesome. Uh, in that case, I would be looking at this as some kind of ABC and this as some kind of ABC. And there's a lot of discussion whether or not you have an early cycle peak coming or a late cycle peak coming. What if this will appear as a cycle peak because the number is getting so high, but this, well, back, this ends up being the median of the bull market, basically the midpoint. And then this correction right here ends up repeating up here until summertime, and then you get this last final leg up, something like that, into October, November timeframe to make this whole pattern match and be totally complete. I'm not totally fixated on that idea yet, just pointing it out there as it is a potential. It wouldn't count very well as an Elliott wave. You'd have some kind of 1, 2, 3, 4, 1, 2, 3, 4, 5 in an extended fifth type thing. So 1, 2, 3. This is 4, and this whole move up here would be an extended fifth wave. Um, and it might take long. You might have a consolidation distribution happening between the time frame of like March to July, August area. So it might feel like a peak, and then you have stagnation going on thereafter. That's kind of how this bull market has been since the lows. You have very sharp moves up, a lot of consolidation, sharp move up, consolidation, sharp move up, a lot of consolidation, sharp move up, consolidation, maybe another sharp move up. That could complete your move right there. I mean, that would look like a very nice Elliott wave pattern. So I would caution to say, hey, you might have a top coming in right there, but also have the potential for sideways. But that would be some kind of ABC, ABC, ABC. 1, 2, 3, 4, 5. Elliott wave pattern complete, ending diagonal, and that would look pretty good. So potentially, what you would look at is getting out of the market at an ABC, a 1-to-1 fib extension of this, whatever this measurement is, and wherever this low comes in, get out of the market there because you're either going to reverse sharply or you're going to repeat this consolidation. So if you're out of the market, you can wait and see what ends up happening. You could take some profits, leave some on the table if you're not confident in trading thereafter. Um, but if you see this pattern playing out for like 3 months, then you can get yourself a clear invalidation before another move higher. And as I was saying, I was comparing this area to the current area. Let's zoom into this area and see the measurements and retracements that we had on it, because I just found something pretty interesting on there. So if we measure the pullback down to the low, you have a 21% decline. Then if you measure from, like, after you had your run up, you had a peak before the consolidation. If you measure from that day to the low, that was 49 days. So let's take that same idea with our consolidation here. And I still have that same target marked off from last video at 87.6 area. But let's take this after the run up, you had a peak. Let's count out 49 days. Just happens to be today. Today is the day for that. And the percent decline from all-time high currently. If we were to bring it down, 21% would bring us down to 85,000. So that gives a little context of comparing that previous consolidation with this one. It's, of course, not the same exact wave pattern, but the timing of this consolidation along with the percentage decline could be in the range of anywhere from 87 to 85 would still look pretty good. And you'd have an A, B, C decline. We'd like to see this getting done early in the month rather than later in the month to get a decent cycle low. It is on the later side of the cycle low, to my understanding, but it's kind of in the pocket. All right, I'm moving into the 2-hour time frame. Rather have the 4-hour time frame probably for analysis, but 2-hour will work just fine. I'm kind of matching this leg here, this leg here on closing price. These are coming, they look pretty good. Everything here looks like it's supposed to. And the measurements match really nicely. We can get a Fibonacci measurement on this, the start of this yellow leg, projected from that high. We are currently sitting at the 1-to-1 fib extension of that yellow leg. So that ABC works really good, and now we're having a pop up that appears to be mimicking that leg there. So it's looking like the lower price targets are going to play out as long as this leg doesn't invalidate over here. So we'll take a measurement of that to invalidate the sell setup. Come on. So I'll measure this little green leg right there. I'm going to measure the wicks just to have more conservative targets. So trading, or definitely closing above the 1.618 would invalidate a sell setup, and I would definitely be more inclined to buy a pullback. But we're right in the pocket here at 94, well, let's call it 95,000 to 96,000 being your sell zone to then repeat this little ABC up here. So let's mark that off with a little box for our interest zone for the sell setup. If it decides that it wants to go there, sell off. We'll mark it red. Selling. And then from that zone, I want to measure this upper portion of that leg and project it from there and determine a potential target. Once again, take the Fibonacci extension tool, measuring from all-time high down to that low, project it from the anticipated sell zone, and the 1-to-1 fib extension gets you down to 86.8. So this is kind of in the pocket of my area of interest to complete the move down. Kind of persistent selling, kind of what I was expecting with persistent selling on that leg. This leg appears to be matching the same energy, and it looks like it's playing out and matching. So invalidation, like I was saying, is a closure above 97.5. I'd be more inclined to buy the pullback. New York session is supposed to start tomorrow with non-farms payroll. So non-farms payroll can definitely move price down and potentially hit that target. And if we are to get that target, what I'd like to see coming out of that target after this move completes, my preferred thing to happen is a very slow, methodical accumulation higher to repeat this leg. So if price is to come down here, I'd like to see it slowly build into like a 1-hour uptrend and make it look like an ABC back up to 100,000. And that would be this leg repeating right here. After which you would get some kind of ABC, pullback, back down to previous support, active support again. And that would be really looking good for a Wyckoff. Um, show of strength up to here, back test the previous lows where your support was, becomes support again, and then push up the highs and break out, and then consolidate at the previous all-time high, and then have a push up. That's, of course, the ideal scenario. That's what I would like to see. It doesn't have to happen that way. We could end up having a flush down and a reclaim, and then you just hover here for the rest of the day and then slowly grind up. But anytime you break levels like this and take all the liquidity, the price action that you want to see coming out of there to be bullish is break back above the previous support, back test it, and then run again. Sometimes what we will see is big reversal and it kind of gets up really overextended. We often do see price come back to previous support. Just check it out. Happens quite a bit. It doesn't have to. It certainly doesn't have to. But like, what if price gets up to like 106? Then you would have a higher high close there, and then you look for the higher low there. It, it can do anything it wants. We're coming up on a weekend, so it might have some weekend choppiness up and down, or it might just just rocket up and short squeeze over the weekend so that Monday opens up on new all-time highs. You never know what they're going to do. It really depends on the liquidity, where they want to put the liquidity, and where they want to take it. In previous videos, I think it was the last video, I was talking about the Elliott wave pattern that had this area as a 0.5 fib retrace as a wave 4. Minimum wave 5 target would be 130,000. And there's a potential that out of here you get what is called an extended fifth wave. The extended fifth wave would have you have a wave 1 up to 130,000, pull back a little bit, and then keep pushing up to, say, 160, 170 before consolidation and going sideways. So, around the 120 to 130 area is probably a take profit and watch for a pullback. If it just keeps pushing, then, buy into the trend, buy into strength, keep buying it. But so those are areas to watch. I would also watch the RSI on the daily for bearish divergence to potentially give you an indication of a local top. But we'll cross those roads when we get there for the potential. What I'm really looking at is the support. A lot of people look at support and resistances. I don't. I look at liquidity, and all the liquidity down here, it just makes sense to stop people out or even scare the crap out of people and then reclaim. And then you take all the people that are short because of a potential head and shoulders pattern that's here. You're starting to see that a lot in the feed where people are pointing out head and shoulders pattern. As soon as it breaks down support, you trade that down, the extension of that. However, in a bullish market, you often have bearish patterns like this that don't perform as well as they should. So the target for this is 77,000. I think everybody knows that. We're all looking at the same chart. We all see the same pattern. I would caution that in a bull market, assuming the market is still bullish, your bearish patterns do not often meet target. They sometimes meet halfway, or this might actually be it. If the market was able to get enough liquidity, this may have been enough to trigger people to sell that, but I think you need another push down for it. You don't have to. You certainly don't have to. But I would suspect that we're just going to go push down, then reverse. If we zoom out to some previous price action, you can see, where was it? This leg over here, down at the bottom here. Kind of look like you're doing the same thing right now where price pushed down, bounced back up, came back down, looked like it wanted to break down, but then it really was just grabbing liquidity and giving people what looks like a 5-wave down, so a 3-wave back, shorted it, and there it goes. It just keeps on moving up. However, on a 4-hour, I think that was still a higher high, higher low situation, so That was an ad, but it definitely didn't. From an Elliott wave perspective, this looked like it wanted to go down a lot, but there it goes. It just goes up. So we kind of have something similar going on here, where you push down and you kind of make a nice impulse down, and then it just goes up. So if that is the scenario that's going to play, I'd like to invalidate the sell setup that I was referring to earlier, which is that leg. So you invalidate that by getting above 90, 97,500 or so, especially on a closing basis. Then that leg is no longer repeating, and you're likely to come take the liquidity up above, because you kind of just took that ever so slightly, took that low. Yeah, we'll see what non-farm payroll gives us. It's probably going to offer a whipsaw, and then close the day out probably somewhere around the same area and keep you guessing all weekend. Yeah, those are kind of my thoughts, but I'd like to see a move down and a slow grind up accumulation, and kind of repeat this pattern, and then ultimately repeating all of that to keep going up. And then you eventually get this very large impulse on some kind of news. Yeah, those are my thoughts. So we're waiting the market to tell me whether or not I should buy this. On a daily chart, you made a lower low, ever so slightly lower low close. 4 hour is still in a downtrend until it's not. If the 4 hour starts closing a higher high, then buy the higher low. You can have your stop loss at the low. Any break below that low, and you're taking out all of the liquidity, probably down to these areas, 87, even as low as 85. It's all fair game. You never know where a stray wick is going to go on a liquidation event or a cascade, but it might get bought up quite rapidly. But yeah, ideally, let's repeat this pattern, going back up here into a February mid-cycle low, and then start getting a real strong February to mimic this leg up. That would be great. So I'll try to make another video tomorrow to update on what I'm seeing. But yeah, watch non-farm payroll, keep your stops tight, and have a good night.